Hi, Vieira with stockmarketlive.tv. Today you are going to have in your account, starting with bull and bear high performance, trading 101, also in autonomous trading plans. The second half of the mini course in your account. In there, during 1 hour, I explain many things. In my perspective, I respond to many of the questions that investors they have, namely explaining and justifying what really matters to you going forward, how to address the markets, and how to become a better investor, also a better person, by following that coaching that you have as of today in your account. This will not be valid for those that they subscribe to the bull and bear standard, because this information of very high value should be only available to those that they give value and they evolve and they intend to evolve in their careers. And as I addressed in the past, depending on your subscription, the higher and the better quality of information you receive. Having said this, therein I respond to one of the most important common questions that investors they have is, how do you make forecasts in the markets? For example, where the price targets are coming from. Are price targets really important, or there are things by far more important than price targets? This is explained. It has been in fact explained, or it was explained a long time ago in many of my courses in the past, but since I'm going to have a new traders course, I explain it once again. And I think that people, they have to know how things they work, okay? To know how they work in reality, what really matters to them. There are by far more important things than price targets. And therefore one should not have or consider the price target as the ultimate goal or objective when, for example, this concept that is utilized by Wall Street, generally speaking, it is by far more important to have, for example, the idea of the risk involved rather than the price target. Everyone uses a price target, but if you are not confident, or if you have not demonstrated or proved to yourself that you can do it consistently, not only in stocks as well as other financial instruments across different market sectors, your price targets are completely useless or irrelevant. And therefore, in the end, it happens that most people, they lose money in the markets by following their own beliefs or other beliefs, namely these price targets. But many other things, they are said in that second part of the mini course, which I believe that is by far more important to you in your future career. So there is a very high value in this information. By far more important often than to tell you which is the next stock to move, or to tell you where are you going to make the next profit. Because I could here refer, as you have today, new all-time highs in Ferrari, which is not obviously a surprise to anyone, but I could refer here, as I referred already pre-market, to some important things in real time that you have to be aware of if you wanted to, or to continue making consistent profits in the markets. And you receive this information in real time. So you have to know where is that information coming from and why, as well as you have to understand or comprehend also our decisions communicated, as an example recently, downgrading the tech sector, these power shares, the Qs, to buy on a long-term basis. We didn't downgrade to neutral or to sell, we downgraded to buy, and I explain why did we downgrade to buy other than to neutral or to sell or to strong sell. Because one of the reasons is the fact that we still have many long positions in the markets that they are doing very well. Other is related to the fact that most people they fail continuously because they try to figure out where the bottom or the top is going to be. That is not the objective, and it has never been the objective of a successful investor. There are other things that they are by far more important and addressed yesterday as an example in the case of Goldman Sachs, when even professionals or the so-called great investors, they make important mistakes, as it occurred with the case of George Soros buying Snapchat ahead of a collapse, or Goldman Sachs. But by far even worse, he sold Nvidia, one of the best investments ever, which I defended here as a quadruple investment position. So you find this information on Google, and these are serious mistakes that you have to avoid, and we were there precisely helping you to avoid these mistakes. Yesterday also addressed here the case study on Goldman Sachs, but I didn't say everything that was in fact necessary to address, because there are more important things than the Goldman Sachs correction. Okay, it happens that a few months ago I told you, when we decided to quit the investment process or to bail out of Goldman Sachs, I told you that in my perspective in the financial sector, if you wanted to continue profiting from the financial sector, there were stocks that they had by far more potential going forward than Goldman Sachs itself. And I gave you a stock pick. It happens, and this stock pick that I referred to several months ago is going to constitute a case study in the future that you are going to see. Everything, it was planned in advance as everything else. We plan all this in advance. That is why the value of strategic planning, okay? So it was not the value of the case study in Goldman Sachs, it was not the correction that occurred, okay? Since that we already knew that the probability of it to happen, it was very high. The value it was to close the investment position, Goldman Sachs, at a price of $238 and utilize that profit to invest elsewhere, not necessarily to sell short Goldman Sachs, because that was not the primary objective, as I explained in December 2016, but to utilize that profit to invest elsewhere. And today, if you did it, you are very happy, because the stock that I referred to in the service last year called Platinum, the most popular service, this stock or this company, also a bank stock, today it is trading at new all-time highs. Okay, so the vision that we had last year by closing a position and rotating capital into a different one, it materialized into a very large profit, and therefore a successful investment strategy that we often refer here as a concept of hedging strategy that is dramatically different compared to the rest of the industry. Since the rest of the industry utilizes this concept to manage risk, and here we utilize the concept of hedging strategies to maximize the return on investment, which is a completely different, or it has a completely different objective. And in fact, that should be the objective and not to manage risk. And the reason they manage the risk, because they are incompetent, okay? And because they are incompetent, they need to have tools to manage the risk, okay? While to manage the risk, it is related in fact to other tools that they are by far more important to manage the risk, or at least to know how much is the risk involved in a certain trade, rather than to have the hedging strategies, okay, that they call about. So the hedging strategy, the concept here, throughout the history of the company, it has been dramatically different compared to others. But you are going to know more about all this in the new traders course. And so I invite you to go through the second part of the mini course, and also, like I say therein, that there is one thing that I have to refer to. We have people in the service, and often you don't find me here say thank you and so on, but I should, because we have people, very small investors with very small accounts, with very high value in the company, in the service. And I already said this in the past and I repeat that we do not differentiate between people that they have very large accounts compared to small accounts. We know you, we know the customer, we know your potential, we are aware of it in most cases, not 100% of the cases, because I have not spoken directly to all of them, but we know where you are. And this is important because you have to know that on this side there is a person, at least an entire team, that is aware where you are, that wants to help you to evolve, and knows that you have very high value, and moreover that probably it has more confidence in you than yourself. And therefore you should be aware of this, to know it, to be proud of it, because people with very small accounts, they accomplished something which is unique. For example, in my course Life Technique Analysis, I already recently addressed this matter when I said that I was shocked by the fact that many, they responded to assignments recent 100% accurate compared to the time that they subscribed to the course, where they obviously, when they responded, there were mistakes. But this also tells us that you have been taking things seriously, and this is by far more important, okay, for us. And it is not about the profit in the end, because profits, it is a consequence of a methodology, and you have to go through the process in order to understand it, okay? So you should not ever try to rush things. You should give time to yourself to get acquainted with yourself, who you are and where you are, because you have more than anyone else as a reference. What others they are doing does not matter, but where you are, where you want to be, where you want to go, it is by far more important than to focus your attention on the profit today, invest in yourself, in your education, having in mind the future, okay? So listen to the lesson, because hopefully it will be of great value to you, not only as of today, as well as in the future, since that is the mission of the company. Again, I repeat that I address there, where this stuff is based on fundamentals, technicals, things like emotional analysis, that often it is by far more important than other stuff. There are many people that we can tell you today there is a great opportunity in a given stock, like I addressed recently, the case of Nvidia, but what really matters in the end is what you do, okay? Whether you pull the trigger, whether you have been able to profit from Nvidia or other opportunities, how much have been exposed, and so on, and helping you to gain the confidence to be there in the end, to surpass your let's say mental issues, if I may use that expression, because in the end I think that is by far more important than to tell you about price target or something that is what is going to be your response, your planning, your strategy to profit from an investment plan where we said that it was of the highest priority. And that defines where you are, where you want to go, and the answers you have to find themselves by yourself, where you know that on this side there will be always someone that is very aware of your state. Obviously, if you are in autonomous trading, we know by far more about you than compared to someone that is a subscriber to Bull and Bear standard, that most of them we don't know what they are doing. Most of them is a way of saying, because there are many that they provide feedback and reviews and so on. But on autonomous trading we have these private rooms and so on where we get feedback daily from you, where we share the information in real time. Therefore, obviously, collaboration when in other service there is not. That is the value. And to know about you, which is unique because in other companies they don't give a shit, they don't care. Okay? So who you are, where do you want to go, what your problems are, and how we can help one to dissolve, or at least to solve or to change your attitude. Therefore, thank you and good luck. Bye.